Hello investors and welcome to this Christmas edition of Invest Like a Guru's weekly update. Merry Christmas to you all, and let's have a look at what has happened over the last week. Now, if you have been following us, you know that we have 4 strategies that we follow. We have an ETF strategy down here. It's very conservative, but I've made around 13% this year so far. And we have 3 stock strategies, a weekly momentum, monthly and a quarterly momentum strategies that are primarily in stocks, but when they go risk off, as they did last week, a couple of days, we go into some bond ETFs. So let's have a look at the different strategies, and let's start at the bottom here with the ETF strategy. Now, what we can see here is that, as I said, it has performed with a CAGR of something like 13%. This year, however, only 9.5%, but over time 12.88% here. It has a very high Sharpe ratio and a very low max drawdown. A thing I'll mention here, which is something that some investors are getting wrong, is that normally people are looking to have their winners a lot larger than their losers. Many are saying that they're going for at least 2 to 1, maybe 3 to 1, so that they're making sure they're making money. But as you can see here, our average winner in these ETF strategies is actually smaller than the average loser, meaning that the risk to reward is only 0.94. That is something many investors would normally say no go to, but it doesn't really matter as long as you have a lot more winners than losers. And as you can see here, we have 75% of the trades as winners and 25% losers. And then it doesn't really matter if it's only about 1 to 1 in risk reward. So this one, absolutely a good strategy that you might run just solely this one, or you might combine with some of the other a little more risky stock strategies. Let's have a look at these. Oh, by the way, I simply forgot. Let's just go in here again. The performance, of course, over the last week. Last day we made the video was the 17th of December. So at that point, we had $108,475 for the year, starting with 100,000, and now we are up around $1,000, so about 1%. So we are getting close to the 10% for the year, which is quite satisfying here. All right, let's go to the stock strategies. Now, as you can see, if you're a user of this, and there is a monthly free trial here that you might receive, but as you can see on the front page, I get a little check mark here if there are changes, meaning that there have been a single change to the weekly momentum strategy. Is actually quite an interesting stock that has been bought in there, if you ask me. But you have seen it, or there should be a mail out here at least before market opens today. It might be a bit delayed due to Christmas. But the weekly momentum, if we take a look at that, we can see here that year to date 29.6%, and last time we made the video again here was the 17th, and we were up at 125,500 from 100,000 in the beginning of the year. Now at this point we had taken quite a large drawdown, and what I mentioned to you was that here around New Year I am planning myself to add more money into my portfolios that run with these automated strategies, simply because these drawdown times are normally good times to add more money into the strategy. I wouldn't do it to a single stock, but into a complete strategy I don't mind at all. And as you can see, we were at 125.5 here, and now we are at 129.6. So it has actually been a very good week, the last week here over Christmas, the opening days. There has been a bit of a Christmas rally, and let's see if that continues. But that is a weekly strategy up to 29.6, and with a good bounce this week. All right, let's have a look at the monthly here. We are looking at the info tab, and again we can see now this one is at 22.65, also a very good year, you can see. And here, if we're looking at comparing to the ETF strategy, you can see that the average winner is actually about 1.5 times the losers. You can see here 1.44. And this is more like what many investors are going for. However, there are fewer winners in the ETF strategies. We had 75% winners. Here it is around 60, but the winners are significantly higher or larger than the losers here. All right. If we're looking at the performance over the last week, we can see that we were up at 118,000. You can see that at this number here if you haven't found it. 118,700 a week ago, and now we are at 122. So again, up with around 4,000, which is very good, around 3% or something like that on a $120,000 portfolio here, and we are up around 23% for the year. So also a very good performance overall. However, a bit less than the average over time, but that is how it is with averages. Sometimes you're a bit over, sometimes you're a bit under. All right, and you can see the monthly strategy is for the year at 0.85 in sharp. The quarterly momentum is around 1, and let's just have a look at that one here at the end. You can see 27% this year. And actually, this is one of the reasons why I'm primarily using quarterly strategies myself. It gives a lot less work, it gives you a lot less trading cost, and it gives the stocks room to breathe. So when you buy them, they might drop 10 or 20%. We don't go with a stop loss here. Many of you have asked us, what about stop losses? We don't use them. We have some quite diversified portfolios, at least if you're combining the different strategies. So it doesn't matter too much. And as you can see, the max drawdown this year have been 17% here. But the last week, let's see, where did we go from? We had 123,000, starting with 100,000 this year. That was last week, and now we are at 127. So again, a $4,000 gain on this theoretical portfolio here. And as always, if you haven't seen the videos before, you can always click here to see the simulated results since 2008. And as you can see, the CAGR on this quarterly is 33%. That can, of course, vary a lot. And it takes some drawdowns once in a while, but this is actually not too bad comparing to a lot of other strategies back here in just after the financial crisis, and again last spring with the COVID crisis. So again, a very, very nice return, both historically but also in our live back test. And 27%, that is definitely not bad. So that was the performance this week. We had a bounce in all of the portfolios, and we're looking forward to a very good 2022. I know there are a lot of speculations as to, are we going to see the large crash? And you can see all sorts of financial whiz-kits coming out saying that 22 is going to be the year where the market takes an 80% drop. That is not likely. 80% drops are not likely anyway, and be careful about the ones that think they can predict when a crash is coming. Personally, I thought that the market were going a lot further down last year with the COVID, and see what happened. Everything turned around and went up 60%. So that is pretty much impossible to guess. There will be a crash at some times, but as long as I follow my automated strategies here, I'm actually not that worried, and we will go into risk off when things are going to get a bit rough. So that's how it is. I'll talk to you again next week, and take care of yourself. Have a very nice new year, and let's see if 22 can give us some decent returns. Bye for now.